Here is your Bull and Bear stock of the week. A gaming stock and a biomed company are this week's Bull and Bear of the week. Once again, we turn to Shiraz Mian, our research director, to fill us in on the reasoning behind both. So the gaming stock is Wynn Resorts Limited.
That's right.
Popular company, WYNN, the ticker symbol. If travel and leisure is picking up, probably not too hard to say why this is a bull.
That is true. Though the primary reason why I have Wynn Resorts as the pick is not that.
Okay.
They have.
It's a good guess, though.
It is. They have about a quarter of their business, their current revenue coming from the Vegas Strip. So the improving trend that you referred to helps them there, but the bulk of their growth is coming from this Chinese island called Macau, and they are very well entrenched over there. And that is the primary revenue, cash, and growth driver for Wynn Resorts, both right now and also in the coming days. So two main reasons why they are the bull. Number one is this extremely good growth outlook, and number two is their very, very solid balance sheet. So just briefly on the growth, they are one of the licensees of operating in the Macau, as I mentioned, and they're, given their brand, given their reputation, they carry more market share than the size of their operations. And they just recently got approval to build a second, much bigger destination resort casino on this area called the Cotai operation, and that's something that's going to come through in the 2015 kind of time frame. So a very solid positioning in the Chinese market. There have been some questions as to how good the growth picture there is, but they are the premium operator in that market, and the premium market, the premium segment of that market is not showing any slowdown. In fact, the growth numbers that we saw in the recent quarter were as good as we have seen in the past. The Las Vegas strip operation and the improving trend over here is just the icing on the cake in the Wynn story. Just briefly on the balance sheet front, they have a ton of cash on their balance sheet. Very well run, conservatively managed firm. They don't hesitate to share their ample cash with their shareholders. In fact, just the other day, they announced a very lucrative and better than expected $5 a share special dividend. So despite their major expansion plans over the next couple of years, they see the stability in their financial health to give out a special dividend like the one I mentioned. So an overall, a very solid story now as well as for quite some time to come.
I wasn't too far off the mark then.
That's right.
The bear is Human Genome Sciences, HGSI, on the NASDAQ. What is the problem with this one?
You know, these are, as is typically the case with biotech companies, their valuations, their market capitalization essentially reflect the hopes and dreams for the future, not so much current earnings and current revenue. And that's the case with Human Genome Sciences as well. They will have probably about 300 or so million in revenues next year, but it's a $2 billion market cap company, and that disparity essentially reflects the expectations for their key drug, this Benlysta drug, which is supposed to be a blockbuster drug in the coming years, and it's the primary drug which has come out in the last 40-50 years for the lupus disease. Now, what's happening is that the expectations for this drug appear to have been way too high relative to how the market is receiving the drug. We have had about 2 quarters of how the drug has performed right now. and the sales numbers don't look too good. Now, management had been talking of multi-billion-dollar opportunity in 2-3 years time frame, but those expectations most likely will be coming down in the coming quarters. In fact, in the most recent quarter, where they missed expectations, they guided that their original plan that they will break even in 2013 was pushed further forward to 2014. So overall, in the long run, it's a biotech company. One of their drugs in the pipeline may pan out. Benlysta may actually start getting better reception in the long run. But over the next 6 to 12 months, I see this stock continuously being under pressure with estimates coming down, and that'll weigh on valuation.
Okay, pretty interesting. Don't forget, we also do the bull and bear of the day on our website, Zacks.com, the homepage, as a matter of fact. So if you're not there watching this video already, go to Zacks.com, and if you scroll about midway down the page on the left-hand side, you will see an icon of a bull and an icon of a bear. Stocks next to them, they change every trading day, so you'll want to check back often for the bull and bear of the day on Zacks.com. With Shiraz, I'm Terry Ruffalo.